Hi, friends. Professor Joe here. I hope you all are doing great. Welcome to this video. In this video, we are going to discuss the three EMA trading strategy. This is a great, awesome strategy. It can be used for scalping and it can be used for long term trading. It perfectly works on a 1 minute chart and a 5 minute chart. So that's why it's a wonderful strategy for scalping. Let me tell you a harsh reality before I go further in this video. Normally, in 90 days, 90% of the traders lose 90% of their equity because of lack of knowledge and practice. One day, one of my students asked me, Sir, why only 90% of the equity is lost? Why not 100% of the equity? So I smiled and answered back saying that when they lose 90% of their equity, they lose all their hopes, and either they take a withdrawal of the balance 10% or they leave it. That's why it is 90% of the equity. Jokes apart, if you really want to be a successful trader, you need to practice. You need to have a lot of patience and you need to have persistence. You need to find that one strategy that fits your personality, your availability of funds, and your risk taking appetite. Once you're able to identify that one strategy that is best for you, then you need to practice it 100 times. Practice it 100 times and then go for it. When you do this, you will then eventually become a very, very successful trader. You know your risk, you know your reward, there is nothing there to stop. Now, as you can see, this is the 3 EMA scalping trading strategy. What I have used over here is a 5 minute chart. You can see all the 3 EMAs, 50 EMA, 100 EMA, and 200 EMA. You can see the price has gone below 200 EMA and then it retraces back to above 200, 100, and 50 EMA. After some distance, you can see that there is a clear separation between the 50 EMA, 100 EMA, and 200 EMA. This is when you have to get ready to enter your trade. Now, like you can see, the price is entering into 50 EMA. It first touches the 50 EMA, then continues down, it touches the 100 EMA. Now, in this situation, if the price goes below 200 EMA, then you have to wait for another opportunity. But since here you can see that the price did not go to 200 EMA and it bounced back off the 100 EMA, you have an opportunity to enter the market. Now, when the green candle ends above the 50 EMA, that is where you have to enter the trade. And your stop loss will be below the previous swing low over here. Once you enter the trade, your risk to reward should be 1:2. Do not go for higher risk to reward initially. First, get used to winning 1:2, and then later on, you can practice more. Use the trailing stop loss, which I have spoken about in my previous videos. Use the trailing stop loss and then go for the maximum profit. But initially, when you are starting, your goal should be to get 1:2. Now, like you can see in this video, after you have placed the trade, the price went up, came back and retested the 50 EMA, and then went back up and gave you a profit of 1:2. Of course, the price continued ahead, but as we discussed, we will not go for it for now. Any technical analysis strategy can be used on stocks, crypto, forex, commodity, and options. That's the beauty of technical analysis. Now remember, when you are starting out, do not risk more than 0.5% on each trade. Maximum risk 0.5%. Then, as you get better at it, you can increase your risk. But at least for first 100 trades, do not go beyond 0.5% risk. Now let us see the setup, how it will look on a sell side. The setup remains the same, only everything is in the opposite direction. So let us see how it looks. Like you can see on this setup, after the crossover over here, the 50 EMA, the 100 EMA, and the 200 EMA are well split. After that, the price has come below the 50 EMA and then retraces back. It touches the 50 EMA and then touches the 100 EMA and does not go towards the 200 EMA. Remember, I have told you if the price goes above 200 EMA in this case, your setup is not a good setup, so you have to wait for another setup. But in this case, the price reversed back after touching 100 EMA. So like you can see here, this is where you are looking for a sell trade. Now, when the price crosses back the 50 EMA, you are going to enter your sell trade with your stop loss above the previous swing high over here. And you risk 0.5% for that much distance. Your take profit is 2 times of your risk. As we have said earlier, let the price go as much as it want to go, but you exit at 2 times profit. Once you become an expert, you can go for that additional profit, or you can go ahead with the trailing stop loss strategy. Now, you can always improvise on this scalping strategy. So let us see 2 things that you can do to improvise this scalping strategy. Number 1, you can add RSI to this strategy. Let us see how it looks. Like you can see, everything remains the same on top. But just to confirm, you can wait for the RSI to come in an overbought position. I have highlighted that area over here. And the minute the RSI comes below that dotted line, you can enter into a trade. So here you are taking 2 confirmation. Confirmation number 1 is the price coming below 50 EMA, and confirmation number 2 is when the RSI line comes below the dotted line from the overbought position. You can further improvise on this trade. Yes. So let us see what are the next improvisation you can do on this trade. The next improvisation is you can wait for a support zone to get converted into a resistance zone. Like you can see on the chart, the price, the EMA and the RSI now remains the same. But you can see how this support zone over here, the price broke the support zone and then gets converted into a resistance zone. Exactly where the 100 EMA is there, exactly where the RSI is at an overbought positions. And this is a perfect entry point. Filter number 1 is your 3 EMAs. Filter number 2 is your RSI. Filter number 3 is your support zone getting converted into a resistance zone. This strategy can be used for scalping because it works very well on 1 minute and 5 minute charts. Remember, trading requires a lot of practice, patience, and persistence. So do not rush into it. You like the strategy, you practice it first. You start infusing 0.5% of your equity and practice it 100 times. Once you are comfortable, once you are confident, once you have done the practice, then go ahead. If you want, you can increase your risk. My suggestion is never to increase the risk. Now, friends, I have written a book, Traders You Can Win But First Learn to Lose. This book speaks about technical analysis, trader psychology, and also has a couple of trading strategies that has been explained in this. It's available on Amazon in Kindle. If you're interested, you know where to buy it. Now, friends, if you love the way I create content, please like and share these videos so that, like you, there are others out there who want to learn trading the right way. These videos will be very, very helpful for them. I have created a lot of videos and I'll be creating many more videos. To get the latest update on those videos, kindly subscribe to my channel and ring the bell icon so that whenever I create a video, you will be the first person to be notified. All I can say is keep learning, keep growing. One more reminder, I have my training videos down there. It's totally free. Please click on the link and go through all the videos. You will learn a lot from those training videos. Thank you. Namaskar.